Ryan, welcome back. Good to see you.
Thank you for having me. Great to see you as well.
You know, China, right? So many of our international, our national security issues have to do with China. And there have been recent reports that indicate that Chinese state-sponsored hackers breached the U.S. Treasury Department and that they accessed sensitive information. And that's like kind of terrifying. Now, how might cybersecurity incidents like that impact me, you, individual retirement accounts like 401ks, IRAs, TSPs, like Chinese getting into that info? How worried should we be about our individual accounts?
Well, first, I'll start out by saying China has fully denied any responsibility in the hack of the Treasury.
Yeah.
But in all seriousness, I think that that's a major incident that should not be overlooked at all. I mean, that is critical infrastructure to our country that was hacked. And, you know, if China has the capabilities of attacking our critical infrastructure, stealing sensitive data, there's nothing to stop them from digging further to even your own personal bank account.
Right.
I know that, a certain bank, I won't name the bank, but people who were affected by this will know who it is. A couple of months ago, woke up to showing zero account balances in their bank account.
My gosh.
And several thousand people had this experience, and the bank deemed it as a glitch. But my point being is that, if China can hack our treasury, who's to stop them from making their way through our retirement accounts, our bank accounts? I mean, all of our technology comes from China, so who knows what they have embedded?
This is one of the things. I'm going to go afield just a minute here. It bothers me about we're supposedly the most powerful country on earth, but our cybersecurity worries me a great deal. The fact that, like you said, if it wasn't China, it was somebody who was able to hack into the U.S. Treasury. And so imagine, I just want the average person to imagine walking up to their ATM one day, putting in their card, and they can't access anything. And they know there's money in there and they can't access it. That to me is like, I don't know how aware you are of what we're doing to protect ourselves in that way. Is our cybersecurity up to snuff?
I mean, again, to the point of the experience that this particular bank already showed to their customers, it's a real thing. That fear is a real fear. It can happen to any one of us at any point in time. And I'm going to go out on a limb and say there's probably several members of this audience who have the exact same fear. That is my money safe in my bank, or is my money even safe in my retirement account? Right. And there's a law that was enacted in 2010 under the Obama administration called the Dodd-Frank Act that most people don't realize. They're no longer doing bailouts if there's a significant failure of the monetary system. Instead, they're going to do bail-ins. So that means those retirement accounts that are held at these big name brokerages in a potential failure situation, you're an unsecured creditor to that institution. And as an alternative form to bankruptcy, they'll just claim your retirement account and use it to pay off their creditors.
I'm willing to bet very few people understand that and know that. Hopefully that's something we get changed here under this new administration. Can I pull back with you before we go on to more specific things? Just in your position, in your industry, with the change in presidential administrations, how do you feel under this new administration? What kind of just sense? It's early, but are you getting a sense of how things might be going forward?
Well, I would like to believe that we're all getting a sense of it. I think Trump has done more during the period of time he's been confirmed into office than we saw during the last 4 years of the past administration in terms of positive change. I mean, the last administration, in my opinion, did 4 years of destruction
Yeah.
to our country and our economy.
You and I
But
agree on that.
thank you. And Trump is taking extremely swift action. And I know that for some people, it might be ruffling their feathers. But you know what? Good. The feathers need to be ruffled, and action needs to be taken, and change needs to get done.
Yeah. Just before you and I began recording, the president was talking about FEMA and what a terrible federal, some people like to go into federal office and say, let's take more control into our agencies. But in the case of FEMA, he's talking about how dreadful they have responded to certain things over the last couple of decades, and that maybe states really just need to be given the resources and then let them go with their own responses to these emergencies. And I think that's not a bad idea. All right. Upcoming changes to retirement contribution limits. Again, we're going into all of this. People work their whole lives to save and put money away and feel secure. And like, now, if I want to stop working, I have the means to continue my life. So with the IRS announcing an increase in 401k contribution limits to $23,500 for this coming year, 2025. So again, that's an increase in what you can contribute to your 401k. And they've also introduced a higher catch-up contributions for individuals age 60 to 63. I'm not sure that I know what that means, but if you're an investor, what strategies should you think about to maximize those retirement savings? And what is the catch-up contribution? I'm not sure what that means.
No problem. So before I answer your question directly,
Okay.
I want to read to you 3 alarming statistics. Okay.
Yikes.
And this came out through Zero Hedge this week. There was 18 in total that were listed, but I'm just going to highlight 3. I think I got maybe 4 of them. Number 1, Americans that are retiring will need on average $1.2 million to last them 30 years in retirement.
Okay.
Okay. Most Americans don't have that who are nearing retirement. Only about half of U.S. households currently have a retirement savings account. 47 million U.S. households with older adults are either financially struggling or at risk of falling into economic insecurity. And then the last one, and then I'll directly answer your question. Social Security is the primary source of income for most Americans over the age of 65.
I think people go into their retirement thinking, well, that's what I'm going to rely on, right?
It's so alarming. It's so alarming because, again, most retirees, especially those who are nearing retirement age or collecting Social Security, know that Social Security is just a bunch of IOUs from the U.S. government. And many of them, like myself, I don't even count Social Security anymore as part of my retirement plan because it probably won't be there. So in terms of, investors, workers, retirees, take full advantage of any retirement benefit offered to you. Maximize what you put into your retirement account. As far as a catch-up contribution, it simply means if you weren't able to make the full contribution limits prior, you can now catch up on those contributions.
Okay, interesting.
Okay?
So
Yeah,
you can contribute more to your retirement funds right now to get caught up on what you weren't able to do in the past.
That is
Okay,
correct.
gotcha.
Yeah.
Okay.
So, but again, at the end of the day, the point is maximize every bit of what you can. Right now, again, with that, now we need to talk about mitigating risk. Right, because retirees. I'll give you an example. In the 2008 market crash, there is a little fun fact about the 2008 market crash that isn't often talked about or talked about enough or exposed is the early boomers who were born starting in 1946. Okay, it was 46 to 64 is the boomer generation. They were supposed to start retiring in 2008.
Okay.
And they lost 50% of their retirement portfolios because of that crash. And it took a decade for the market to recover back to where their retirement accounts were at the beginning of the crash. which means those retirees had two choices: take a 50% haircut in their retirement distributions, or work for another decade and wait for the market to get back to where it was so that they could then retire with the retirement income that they were anticipating. Well, we're facing that scenario once again, okay, where retirees are facing the potential of a significant market crash, right? So as much as I say, maximize your retirement, you still have to be able to mitigate risk.
Yeah, you do. And I think it's so difficult for people just in everyday terms to get their heads around just saving, because a lot of people can barely make their dollars stretch, right? So that is it's a tough thing for people to think about, and they think, well, I'm contributing to Social Security, so that will be what I rely on. But as you said, it's just, will it be there, and is it going to be enough? I mean, those are two massive questions. So you talk about mitigating risk. How do they do that? What do you think is the best way?
Sure. That's the question of the hour, right?
Yeah, it is.
The days of the set it and forget it portfolio, I believe, are done. I believe the days of the cookie cutter 60-40 stock bond portfolio, I believe those days are done. People have to have more of an active role in their retirement. Now, what does that mean for them? For somebody that just doesn't know the market or know what to do? Well, in that case, obviously, then you need to work with a professional that's going to help guide you. That presents its own challenges in and of itself, right? Because again, many times I'm faced with a scenario with the clients that I work with that have someone, a financial advisor, financial planner that they've been working with for years, and they reach a point where they say, okay, well, I want to make some changes, right? Specifically in dealing with my clients who are looking to move their portfolios, a portion of, into precious metals. Well, precious metals are not sold by the institutions that sell securities products.
Right.
So the big name institutions we're all familiar with that manage retirement portfolios, again, I'll leave the names out, but we know who they are. They then have to advise their client to move money out of their house. Okay. So where the challenge then becomes present is their license requires them to have a fiduciary duty, right? And that simply means they're to do what's in the best financial interest of the client.
Correct.
Okay. They get paid by what's called AUM, assets under management. So if you have a client with a large portfolio, let's just make it a simple $1 million portfolio, and that client says, I want to move 30% out of my portfolio out of your house. And I want to put it into precious metals as a hedge for what I believe, and I being the client, what I believe to come. I think we're facing turbulent times, and I want to hedge my portfolio. Well, in my opinion, the moment that fiduciary doesn't want to follow that client's guidance, or it's their money, they should get to do what they want with it. When they sway them from not making that movement because they're not doing what's in the client's best interest, rather they're looking out for their own paycheck, because now that means that they're not going to get paid on $300,000 a year off that client's portfolio. So that's one of the particular risks, I would say, that comes with trying to find someone to work with that's open-minded, right? Number one, open-minded, and understands, or at least takes true hold of their fiduciary duty to their clients.
And let's be clear, there are some of them out there. There are many of them out there.
Oh, absolutely.
Who will do that, right?
I came from that. I came from that side of the industry.
Right.
Right.
Okay.
So that's why I feel comfortable putting it out there that, there are some that are, throughout my early years of working in finance on the Wall Street side of the system, every advisor that I learned from that I would, say was a good, again, my opinion, a good advisor told all of their clients, you should own at least 10% of your portfolio in physical precious metals.
Interesting. And I at the risk of taking another avenue, I just want to ask the simple question as to why that is. There are plenty of investments available to people, and more coming up all the time, like crypto and all these other things that are way beyond me. But so why precious metals?
The short to the point answer, they are sound investments with no counterparty risk. Gold and silver have a 5,000 year track record. They've been money for 5,000 years.
Right.
They've held value for 5,000 years. Right.
So
Silver's a little
stability
more
there. Yeah.
Sure. Silver's a little more speculative in the sense that it's the second most consumed commodity in the world, second to crude oil. Wow. So it has a huge industrial usage.
Okay.
So there's more volatility that exists in silver. But again, per our United States Constitution, gold and silver are money. Mm-hmm. Gold is always considered to be the preservation of wealth. I've said for many, many, many years, you buy gold to stay rich, not to get rich.
Okay. I want to get into something else. I lost my mom about a year ago, just over a year ago. And what I witnessed in her later years in life was scams. People contacting her to suggest, there are some really obvious, awful scams. Like you get this computerized voice on your answering service or your voicemail saying, we need to talk to you about your social security number. But this one really gets under my skin. The scams disgust me. So what precautions can people take just to make sure that their retirement accounts, are safe or safeguarded from fraud and unauthorized access?
It's a really good question. The scams seem to continue to get more and more elaborate. I mean, even myself, I'm bombarded with these emails and these text messages of, this account is that, and just click here.
Yes.
Right. And yeah. So I would say first and foremost, the simplest thing is if you receive a phone call, if you receive an email, don't immediately respond to that phone call or email. Instead, contact the person, be it your advisor, your broker, the administrator of your IRA or 401k. Contact them directly through the point of contact that you have or through a phone number that's on your statement or on the website and verify.
Right.
And let them know, I received this phone call stating this. Is this an accurate statement? And if so, can you help me? In other words, go to the source. Go to the source.
Yeah.
Right. And then the last thing that I think I can say to that is if you receive an email from a Nigerian prince that needs your help in getting his inheritance, that one's a scam.
My brother lived in England for a while, and I remember waking up to this email or voice. I can't remember if it was a voicemail or email saying, hey, I'm in London and they've taken my passport and I need help. And I was like, what happened? And I called the number and I got this, hello, just it was like some total scam. And people just need to be really careful. Just because it shows up in an email and maybe has a logo on it doesn't make it legit. So that's a very good piece of advice.
I will interject one thing to that. And this part I find frightening, and I'm sure you've probably heard about this as well. Now with AI,
yes,
they're copying people's voices and making distress calls, just like you had mentioned about losing the passport. using an AI generated voice.
This is the scary part of AI. I think there's so much upside, but damn, there's some downside, and people just need to be really careful and take it upon themselves to until we find the countermeasures to these things. We've got to take some responsibility of really checking on these things. When you talk to your clients, what are some of the most frequent questions and concerns they have about retirement accounts, and how do you address those?
Sure. I would say first and foremost, and again, understanding the clients that we're speaking to, are clients that have already expressed interest in some way, shape, or form in gold or silver. So the interest level is there. However, in most instances, it's simply the lack of knowledge or understanding, right? They say to me, I don't understand gold. I don't understand silver.
Right.
And there's a very structured reason behind that. And when I say structured reason, we went off of the gold standard 53 years ago.
Right.
Okay. And that's now 3 generations that have not been taught. And when I say generations, in universities, again, with financial advisors, they're not taught about gold's role in monetary history at all. So it was simply it was an intentional move away from using gold whatsoever. Yet all the central banks have continued to hold gold on their balance sheet. It was a matter of the United States moving people into this debt-based system, this central banking system, and this Wall Street machine system. So when people say, I don't know it, I don't understand it, I let them know right off the bat. I go, but you do, right? Gold is money, right? Gold is money. And I simply let them realize that the currency that we carry in our pocket is not money, it's currency, right? And the defining factor between currency and money, because they carry the same attributes, is that money is a store of value over time. Okay, so gold by definition is money, right? It has no counterparty risk, which means there is no CEO of gold. There's no board of executives for gold. It's a single hard asset that has held value and been used as money for 5,000 years. So worldwide, gold is literally the most liquid asset in the entire world, meaning it is the only thing that you can take to any country on this planet and exchange the gold for that local currency, right? Bitcoin's not there yet. In some countries, you'll get arrested for trying to use US dollars. So gold is the most liquid asset in the entire world. So
can I just stop you right there real
quick?
There are countries you could get arrested for trying to use US dollars in that country?
Absolutely. Mm-hmm. There are African countries, Iran, sanctioned countries by the U.S. Yeah, you try to pass a U.S. dollar, you go to jail. So,
folks, little travel tip: don't do that. Just don't do that. All right. Yeah, it is interesting, and I think you're right. We overcomplicate it. And in fact, it's really, I think, a lot simpler. Like you said, people know more than they think they know about gold. So economic volatility. I mean, we've watched the markets. The predictions are out there. It's going to go up. It's going to go down. So obviously you want to diversify, right? You don't want to put all your money in gold, I don't think. So how important is that diversification in a retirement portfolio? And where should something like gold, how do you make a percentage of that into gold? How do you determine how to diversify?
Great question.
Yeah, very meandering on my part. I apologize, but you get the idea.
No, it's okay. It's okay because so the first thing that I'll clear up is I believe most people are extremely misled about diversification. Okay. because I hear it all the time. I have a well-diversified portfolio of stocks, bonds, mutual funds, bond funds, so on, so on. And I argue that, well, you're not diversified at all then in that case, because you own one single asset class. And that single asset class is securities. Stocks, bonds, mutual funds, these are all securities. So you might be diversified across a single asset class, but true diversification means owning multiple asset classes.
Okay.
Okay. So this is where, in terms of establishing true diversification, I mean, I think step one is owning gold and silver in your portfolio if you want to be truly diversified. In terms of how much, again, at the end of the day, everybody can pick and choose what they want to own in their portfolio. Here's the direction that I point people to. Like I mentioned earlier, throughout all of my career, it's been 10%, 10%, 10%, 10%. I parroted that for years myself. However, about 5 years ago, that story started to change a little bit. And the reason that that story began to change was the global central banks for the last 5 years have been dumping U.S. Treasury holdings at record levels.
Why?
So a Treasury is an IOU from the United States government. Okay. And we currently have $36 trillion in debt. We are adding $1 trillion of new debt just in interest every 100 days. Okay. So in other words, the debt load is unsustainable.
Yeah, it is.
Okay. Now, here's again another fun fact that I'll share. There has never been a time in recorded human history that a country has gotten a debt to GDP ratio. GDP just means how much money we take in, right? If you're a business, you take in money versus your expenses, right? So our debt versus how much we actually make or generate in revenue. There's never been a time in recorded human history that a country whose debt to GDP ratio exceeded 100% that hasn't either defaulted on the debt or has hyperinflated their currency. We are currently sitting at approximately 128% debt to GDP. Well, not for nothing, but the global central bankers know this information probably to degrees that I don't know it, and I think I'm pretty well versed. So when you watch the actions of them saying, okay, we no longer want the counterparty risk of owning exposure to U.S. debt because of these statistics, right? At one point, China had $3.5 trillion in U.S. Treasury holdings. They're down to $700 billion. In 2024, so China and Japan are the two largest holders of U.S. debt, U.S. Treasuries. In Q3 of 2024, they sold the most U.S. Treasuries than any single quarter ever. That shows to me there's a major red flag popping up in the global banking industry, and what actions they're taking is to replace the value of those treasury holdings with gold and silver on their bank balance sheets. So they're selling treasuries and they're buying gold and silver to replace it. So that being said, I simply tell my clients, I'm humbly willing to admit the central banks know things that I don't know. And they're, depending on the central bank, looking to allocate anywhere from 20 to 40% of their balance sheet holdings in physical gold and silver. So if the central banks are looking to allocate their balance sheets from 20 to 40%, I would recommend you simply follow their lead.
That's interesting. And depressing. And a little scary. And a little scary.
It's history repeating itself, to be honest with you. I mean, people, the world has been here before,
Yeah.
right? Even, where everything runs through cycles, okay? Including empires, the length of time that empires last. right? And that average time is 250 years. And guess what?
We're about there.
We're about there, right?
We're about there. So I understand that American Independence Gold offers special promotions for investors. So let's elaborate. I'll have you elaborate
No
on
problem.
the incentives available for people who purchase 10,000, 20,000, and how our listeners can benefit from these promotions.
Absolutely. So current promotion that we have running right now, on a cash purchase of $10,000 to $20,000, we're giving away a 5-gram gold bar with that purchase. The $10,000 is the minimum cash purchase with our firm. In an IRA or 401k, the minimum is a $20,000 purchase for an IRA, 401k. But with that $20,000, and we can do this on the cash or the IRA as well, we're giving away a kilo bar of silver.
Nice.
Yes.
Nice. And I'll just remind people, tafoyagold.com will take you to all of this information. TAFOYA.com. You're seeing it on your screen. It's in the show notes. You can also call 833-324-4653, 833-324-4653, and find out more about these plans. One of the things that I love about your company is how you support veterans and first responders, and that a portion of your sale. I love Tunnel to Towers. To me, it's one of the great American foundations that helps people in amazing ways. So what can you tell us about your partnership, the impact you're making, and so forth?
Sure. So I share that with you, right? We are a veteran-owned company, but specifically our relationship with Tunnel to Towers. I'm a retired fireman. Both of my parents are retired police officers. My father is a veteran as well.
Thank you all for your. I mean, I don't know. I have such a soft spot, a big place in my heart for families like yours. Thank you.
Thank you, and just to be able to continue to give in a manner that continues to help others, and still continue to civilly serve through our contribution. So a portion of all proceeds through our company go to Tunnel to Towers. And for those of you that might be unfamiliar, Tunnel to Towers helps to cover mortgages for Gold Star families.
Yeah.
They also help to build smart homes for those veterans who are drastically impaired for their service, as well as to other fallen heroes, police and fire.
It's amazing what they do, and I'm honestly surprised that when some people say, "Oh, I've never heard of Tunnel to Towers," like, really? I mean, it's like the work that they do is so transformative. Again, tafoyagold.com to find out about that, and I'll give you the phone number again. But the phone number is also in the show notes, and you're seeing it on the screen. And for veterans also, you do a lifetime fee coverage. What does that mean? How does that help?
Sure. So there's a couple of different veteran incentives that are addressed in terms of fees. First, I'll bring up if somebody does a cash purchase of what would be considered a large amount of metal. When I say a large amount, meaning the value, quite often people don't want to have $100,000 worth of metal at risk in their personal residence, right? So we do offer private storage services through several vaults across the country. And again, for those qualifying purchases for veterans, the cost of storage of those metals are covered. In terms of an IRA, because metals are held in a qualified retirement account, they are required to be held in an IRA approved depository. So once again, on qualifying accounts, the fees are covered for the lifetime of the account for veterans.
Love that. A friend of mine was just appointed, and I don't think he's been passed through as of this recording by the Senate, but Doug Collins, a former congressman from Georgia, has been appointed head of the VA, and I know that he appreciates these kinds of things, and I certainly do. This is a big one for me. The military, first responders, that's just so important that we take care of them in any way we possibly can, and I love that you're continuing that service. So folks, tafoyagold.com, TAFOYA gold.com. You can find it in the show notes. You can see it there on the screen. Also, I'm going to repeat the number if you got a pen. 833-324-4653. 833-324-4653. You explained everything really well, Ryan. I appreciate it because, listen, I have a master's in business and some of this still goes over my head, right? So, and I'm married to someone who's in finance and it still goes over my head. So I love that people can listen to this and really understand what we're talking about and understand the benefits for them and the security they could feel at American Independence Gold and doing business with you. So Ryan Derda, thank you so much.
Pleasure. It's always a pleasure to be able to speak with you. Thank you.
tafoyagold.com, TAFOYA gold.com, 833-324-4653. It's there on the screen and also in the show notes. So make sure you check that out. We thank Ryan Derda. We thank American Independence Gold for spending some very precious time with us, talking about very precious metals in these very strange days, but historic and I think fascinating times and optimistic times that we're living in. So check them out through tafoyagold.com and be brave and do good.